One precision engineering firm just partnered with a global clean tech leader to enter the green hydrogen space, setting the stage for international scale and future-ready revenue. Meanwhile, a housing finance company is shifting gears with 2,500 crore rupees in planned funding to support the aggressive disbursement and reduce its funding cost. These two businesses aren't just reacting to the market trends, they are defining them. Stay tuned in the video to find out who they are. Hi everyone, welcome to another edition of Noisemaker, where we keep things simple and focus on companies that often go unnoticed but have strong potential. I am Bhumika, Equity Research Analyst at Desvelado Advisory, and today we'll talk about two companies that have made solid progress in the business and might continue to grow if the trend continues. But before jumping onto the companies, let's see the disclaimer first. Any discussion, facts or writing provided are for information purposes only and do not constitute any buy or sell recommendation. Please conduct your research before making any kind of investment decision. Now let's move to the companies. First company is DEE Development Engineers Ltd, which is in the design, engineering and fabrication of complex piping systems, pressure vehicles and heat exchangers. This company has announced a partnership with a globally renowned clean tech innovator to jointly develop and execute modular green hydrogen production projects across India and Thailand. Formalized through a recently signed MOU, the collaboration will focus on bidding, design and execution of hydrogen systems, marking the company's official entry into the green hydrogen ecosystem. This move aligns with India's National Green Hydrogen Mission and builds on the company's earlier acquisition of DEEDEV Designs Ltd, enhancing its technical depth and backward integration. Company is expected to significantly enhance the company's clean energy portfolio and open up new revenue opportunities in the international market. Talking about the financials, FY25 was steady overall, with revenue coming in at 827 crore rupees, up by 4.9% year-on-year, and net profit at 43.6 crore rupees. EBITDA margins also saw an improvement, rising to 15% from 13% last year. But the real story lies in the fourth quarter. Company bounced back strong with 286 crore rupees in revenue and 31.5 crore rupees in net profit. Especially impressive considering it was red just a quarter ago. Even last quarter to a solid 22.2% now. Going forward, company has guided over 50% year-on-year revenue growth to 1300 crore rupees in FY26. Which is mainly backed by strong order visibility across the oil and gas and power sectors. It expects to book 1600 to 1700 crore worth of orders during FY26 and into early FY27, ensuring a healthy and sustained order book. Also, to support this growth, company has earmarked 100 crore rupees of Capex focused on the doubling capacity of its Anjar facility from 15,000 MT to 30,000 MT. Positioning itself to meet the rising demand and scale the execution capabilities efficiently. Now let's move to the second company, which is Repco Home Finance Ltd, which is a registered housing finance company. It is a subsidiary of Repco's Cooperative Finance and Development Bank Ltd, which is Repco Bank. This company has issued commercial papers worth rupees 100 crore to Federal Bank at 8.5% coupon rate, maturing on 5th June 2026 with CARE A1 plus rating, marking the initial step in its strategy to diversify its funding base beyond traditional bank borrowings, which currently accounts for around 83% of their total debt. This CP issuance is a market test ahead of a larger funding plan, which is 1000 crore rupees through CPs and 1500 crore rupees via NCDs. This move enhances short-term liquidity, support the company's ambitious 4,000 crore rupees of disbursement target for FY26 and gradually bring down the overall cost of funds through a more balanced and efficient debt structure. Talking of the financials for the company in FY25, Repco posted 1,685 crore rupees in revenue, which is up by 10.5% year-on-year, and 435 crore rupees in net profit with PAT margins stood at 25.3%. Q4 FY25 saw 426 crore rupees in revenue and 114 crore rupees PAT, showing steady performance and solid operational leverage. Going forward, the company is shifting its growth strategy to prioritize flexible, scalable expansion over heavy reliance on physical branches. For FY26, it plans to open 40 new branches and upgrade 12 smaller centers, taking the total count to 247 with a focus on Andhra Pradesh, Telangana and Western India. Growth will be increasingly driven by builder tie-ups and strengthened DSA network, allowing for deeper urban penetration without significantly raising the overhead cost. On the asset quality front, the company is targeting 75 to 80 crore rupees reduction in gross NPAs, aiming to bring GNPA ratio around 2.5% and net NPA around 1%, under 1% by March 2026. While Stage 2 assets are expected to decline 7 to 8% from current 9.73%, supported by strong recovery and low risk new loan book. Now let's review some of our previous picks. First company is Pennar Industries Ltd from 219.8 rupees to 246.9 rupees, up by 12.3%. Fiem Industries Ltd from 1641 rupees to 1899 rupees, which is up by 15.7%. Then Man Industries Ltd from 409 rupees to 399.9 rupees, down by 2.2%. Frontier Springs Ltd 3650 rupees to 4048 rupees, which is up by 10.9%. Then Transrail Lighting Limited from 662 rupees to 675.8 rupees, which is up by 2%. Now let's do a small summary of all the recent filings. First is DEE Development Engineers. The company has announced a partnership with the globally recognized clean tech innovator to co-develop and execute modular green hydrogen projects, which is a production project across India and Thailand. Then Repco Home Finance Limited. The company has allotted commercial papers worth ₹1,000 crore to Federal Bank at 8.5% coupon rate, maturing on 5th June 2026 and rated as CARE A+1. That's it for today. You can scan our QR code if you like the breakdown and read the full report. We'll be back soon with more simple and clear market updates. Until then, stay curious, stay informed and stay ahead of the market.